All right, let's get into it. Today, we're going to crack open the financial toolkit. We're going to look at all these essential tools that banks and insurance companies offer, not as some complex, scary products, but as really practical instruments that are designed to help you build, manage, and protect your financial life. So come on, let's open this thing up and see what's inside. I mean, if you've ever felt a little bit lost trying to read a financial document or even just follow a conversation, you are definitely not alone. It's like the world of finance has all this jargon that's designed to make simple ideas feel way more complicated than they need to be. You hear words like these, right? They just sound so intimidating. They feel like they belong in some dusty old textbook, not in our day-to-day lives. But what if we just looked at them a little differently? That's what we're going to do. We're going to translate them and treat them like simple, practical tools. You know, each one has a specific job, and once you get what that job is, you'll know exactly how and when you can use it. It's that simple. Okay, first step in our toolkit are the instruments we use just to move money around from one place to another. These are our tools for paying, and they're really the foundation of pretty much everything we do financially. Let's start with a real classic, the check. At its heart, it's nothing more than a written instruction. Seriously. Think of it like a formal IOU that your bank promises it'll make good on. It's what's known as a negotiable instrument, which again is just a fancy way of saying it's a signed piece of paper that promises money and can be handed from one person to another. It's been a substitute for cash for centuries. But get this old school tool has learned a pretty cool new trick. It's called the check truncation system, or CTS. So instead of physically shipping that paper check all over the country, your bank just takes a picture of it. That electronic image gets zapped over, and the whole clearing process happens way, way faster. Pretty smart, right? Of course, while checks have gotten an upgrade, let's be real, most of our transactions today don't involve any paper at all. Everything's happening in the digital world. So let's look at the two main tools for that. So the two big digital tools are RTGS and NEFT. And honestly, the difference is all about speed and size. Think of RTGS like a dedicated, super fast courier that you hire for big, important packages. We're talking at least 2 lakh rupees. It gets there instantly, and it's handled one by one. NEFT, on the other hand, well, that's more like the regular postal service. It collects a bunch of transactions and sends them out in hourly batches. It's perfect for smaller amounts that aren't super urgent. Okay, next up in the toolkit, these are the tools we use not to spend our own money, but to use the bank's money. Let's talk about the tools for borrowing. It sounds so simple, and you know what? Fundamentally, it is. When a bank lends you money, it's just putting its deposits to work. You get the cash you need, and the bank makes a little profit from the interest. But how does a bank actually decide whether or not to lend to you or your business in the first place? Well, they often use this framework called the 5 C's to figure out the risk. First, they look at your character, your reputation, basically. Do you pay your debts? Then your capacity. Can you actually afford to pay this back from your income? Next is capital. How much of your own money, your own skin is in the game? Then there's collateral. What asset can you offer up as a security blanket for them? And finally, conditions. What's the economy like and what's the loan for? It's basically their formula for trust. Now, for businesses, let's look at 2 super common borrowing tools. Cash credit, or CC, is like getting a dedicated loan that has its own separate account. It's usually for a very specific business need, like managing your inventory. And overdraft, or OD, is different. It's more like a flexible safety net that's attached to your main account, and it just lets you dip below zero for pretty much any reason you need. All right, we've talked about paying and borrowing. This final section of our toolkit is all about creating a financial safety net. These are the tools for protection. This quote right here really nails it. See, insurance isn't about preventing bad things from happening because, well, life happens. It's a tool for transferring the financial risk, the financial hit of those events, over to an insurance company. You pay them a small fee, the premium, and in exchange, they promise to cover your potential losses. Now, maybe the most important thing to get about insurance is the difference between life and general insurance. General insurance is what's called a contract of indemnity, which means its job is to pay you back for the actual financial loss you suffered. Nothing more, nothing less. It makes you whole again. Life insurance is different. It pays out a pre-agreed chunk of cash when a specific life event happens, no matter what the financial loss was. And under that big general insurance umbrella, you've got a whole bunch of specialized protection tools. You can get coverage for your car, for your health, for your home against fire, for goods being shipped with marine insurance, and even against theft.
Each one is like a specialized shield for a different kind of risk.
So there you have it. We've just unpacked the 3 main drawers of the financial toolkit. By understanding these tools, you're not just learning jargon anymore. You're learning how to actually build a stronger financial foundation for yourself.
Just remember those 3 drawers of our toolkit. First, we've got tools for paying, which let us move money around smoothly. Second, we have tools for borrowing, which give us the capital we need to grow and invest. And finally, we've got the tools for protection, which shield us from the financial fallout when the unexpected happens.
You see, when you start looking at these concepts as just tools in a toolkit, it really changes everything. The perspective shifts from confusion to control. So the question isn't, what do these terms mean anymore? The real question is, now that you know the tools, what are you going to build?